Time to see what's on the radar for Dan Rohinton of IA Global Asset Management. He's talking about Canadian natural resources. You're liking that? What do you see?
Yeah, I think, once again, if you go back to where we're seeing in terms of the run, and I think what you see in the oil equity is the acknowledgement that oil prices have been rising off of a pretty substantial trough. And I would expect that the next few days and the next few weeks are probably good for Canadian natural resource. Diversified, solid production footprint, and close to major markets, and no debt, and a disciplined management team that's returning capital back to shareholders. If there's ever an oil equity to really stay focused on, it's definitely C&Q. But I do think it's interesting. It's on my radar today because I want to see the spike, and I'll be curious to see how long it lasts.
Yeah.
Because I do think that the move over the balance of time, so maybe not days, maybe a few weeks, I do think it's probably going to fade from where the open is today.
But do you think it'll fade back to where it was, like in the 60 down, 55, 60 in the last little while, or is it going to stay up above that, get more into a normal range, I guess?
Yeah, I think it's probably, you could argue definitely it was, and I believe that it was overly discounted in the high 40s. But do I see it sticking around the mid to high 60s? I don't think so. I think it's probably heading a little bit lower from where we open today. Maybe like hang around $60, if not in the high 50s.
Now, can Canadian oil companies benefit at all from Iran?
Yeah, directly.
Is there room?
The net pack just goes straight up. So oil price goes up. As long as Western Canada Select goes up, then they get the direct benefit as long as there weren't any hedges on.
But can we see demand increase, though, for Canadian, or no? It
takes too long. Too long. And I would argue, actually, one thing maybe to really think about in the oil market, and I should have addressed it earlier, is just imagine, just look at what happened after Venezuela, right? Oil prices were weaker after on the idea that more supply was going to come on board. So as the Iran situation settles in the way that I think it's driving towards today, I think long-term oil prices are going to see some pressure because Iran is a major oil exporter that's been sanctioned to basically squeeze out the regime. So I think if the prospect of Iranian barrels flowing to the world that don't flow at a discount to China, I think that might actually loosen up the oil market over time. And the market might look into that in the future.
Okay. Nvidia, the stock that everybody sort of loves but sort of doesn't love.
Yeah. I mean, I tell you, in valuation-wise, investors definitely don't love it. And I think maybe two things. The first one was phenomenal quarter, and they have actually their big product day coming up soon, I believe in 2 weeks, if memory serves. And the key thing there is it's the linchpin of the AI trade. You could say the bottlenecks have moved elsewhere, but you need the Nvidia chips and the Avago chips to go. I'll be curious to see how the product day goes, and it is the harbinger of the AI trade. And I think there's an opportunity for the stock to actually rally from here because the post-earnings sell-off seems to me a little bit way overdone.
Yeah, and it's been sitting around this mark for what, 6 months now? More than that almost.
And numbers have been going up. So I think what it comes down to, investors of Nvidia who are skeptical would say this is peak earnings, or next year will be peak earnings, and from there you don't want to pay for a company that's got no growth looking forward to it. To which I say, if AI is as big as it's being advertised, then you're going to need a lot more chips, and those chips will need the best. Will need to be the best, which will be the Vera Rubins, which Nvidia is pumping out later this year and early next.
Okay, and last one, Apollo Global Management.
Yeah, you know what's interesting? So private credit and loan losses have really been burst onto the scene, if you will. And part of that has wrapped up across the private equity companies. The first set of the losses came through with the idea that SaaS stocks, proverbially the old Andreessen Horowitz would say, better than first lien debt. And those now we've shifted to nothing but a commodity. So there's some private equity portfolios that are filled with these things. Apollo's actually is not, but then the conversation shifted to private credit because loans were given out against some of these companies, and in general for data centers and other, call it off, I don't want to say off balance sheet debt, that's not the right word, off public liquid market debt. So private credit has really blown onto the scene. Apollo's a big backer of that, and I think it's interesting because I do think it's a buying opportunity for this company because I just don't see a world where, and it's important to be nimble in these situations for Apollo. So I don't want to say right here, right now, it's a screaming buy, but I am a buyer more than I am a seller today of Apollo. The reason why is you can't have investment grade and high yield interest rate spreads, as they're known, as tight as they are, while having private credit just go haywire. So I think either this is going to spread to the rest of the bond market, or Apollo is a buying opportunity today. I'm inclined to believe that Apollo is a buying opportunity today.
All right, and where do you see it going then?
I see it going higher over time in the next coming months. I think at 10, 11 times earnings, which is about where it sits today, I think that's about the trough valuation. So as and if, I would assume but in the chance it's if things calm down, I expect just the gravitational force for Apollo to be higher, not lower.